I'm Jarrett Carpenter, and this is Future Signal. And on this episode, I'm super excited to have back on the pod Ken Kou. Ken works for Mercy Corps Ventures, and on the last episode he was on, which is actually shocking, it was almost 2 years ago, we talked about everything that Mercy Corps Ventures is doing with Web3, with blockchain, with crypto. Especially we talked about their Crypto for Good fund. So much time has passed that when we talked last time, they were in the throes of their Crypto for Good season 2. Unless I'm wrong, they're either in the throes of season 4 or that's just ended now that we're in 2025. So it's wonderful to have Ken back on. Ken, how are you doing?
Hey Jarrett, thanks for having me back. Yeah, I can't believe it's been 2 years, and I guess it's 2 years in crypto, so it feels even longer. But yeah, thanks for having me.
It's super sobering. I actually, in my mind's eye, when I was like, oh, when was Ken last on? I was like, because I remember it's episode 66, because it's been an episode that really resonated with people. And about a week ago after you and I had spoke, and you were like, yeah, I'd love to come back on. I was looking back and I just looked at the date and I was shocked. And since this podcast then was called More Than Blockchain, but now I've rebranded to call Future Signal. And I kind of wanted to explain that just a little bit, maybe for people, especially Mercy Corps people or Mercy Corps Venture people who are listening. But basically, blockchain was a beacon for some people, and it brought certain people to the closer to the fire. But it also scared away, I'd say, 99% of people. So while it brought in that 1% of crypto, Web3, Bitcoin, blockchain people, it really kind of scared away 99%. So I wanted to go with a name that's a little bit less, future and signal, two words that people can both kind of wrap their heads around. Okay, what's he talking about? Probably has to do with tech. And so now really the focus is crypto, Web3, AI, Bitcoin, definitely getting into some quantum computing. But yeah, I'm hoping that the name is a little bit more welcoming. And some of it's also looking at what other people are doing in podcasting. And I think having blockchain was a little bit too polarizing on both sides. And so anyways, here we are. Now you're on Future Signal. Thank you once again for coming on. This is really exciting. I've sent over a whole host of questions for you to ask, but before we kind of get in there, March of 2023, I was actually going to look up the Bitcoin price, so I had it. But the story in my head in March of 2023, Bitcoin price was like, I don't know, 30,000. And today we sit here, it's 105. You said exactly what I wanted to kind of bring up is that in crypto years, it's been a decade, right? It's not just been almost, 22 months or something. Talk to me about your experience, both personally and professionally, over that time, since we really haven't had the chance to talk. We share messages here and there on LinkedIn, but we haven't even had a chance to even sit down and talk like this.
Um, yeah, it's been, I'm
I'm
just
gonna say
like,
he's speechless. He's just shell
yeah,
shocked.
I think just trying to think back like 2 years ago where we were at and how we got to this moment. Like I guess like FTX went down November 2022, right? And so when we would have spoke, that would have been just a few months after that. Like you said, like deep in the throes of a pretty bearish market, a lot of regulatory pressure coming down on crypto. I think maybe the tornado cash events were happening around then as well. So it was certainly like a difficult period to be in crypto. And we don't get involved in a lot of this policy stuff. It's outside of our expertise, and it's not something that we're positioned to opine on or to get involved in. And so we've been focused consistently on the use cases and launching different pilots on how blockchain, crypto, whatever you want to call it, however that can be value adding in emerging markets. And so we've been encouraged at the continuous builder presence in this ecosystem. So, we did Crypto for Good Fund 2 in early 2023. We ran Crypto for Good Fund 2, yeah, 2023, and then Crypto for Good Fund 3 in early 2024. And then we just opened Crypto for Good Fund 4 at the end of 2024. So we continue to see a lot of really exciting initiatives. The total number of applicants continues to grow. There's just a lot of positive momentum in this space when it comes to builder activity. And this is again, this is in emerging markets. We're focused in Africa, Asia, Latin America. So places that are outside of a lot of the bubble around price and like regulation, and more so focus on like, how can this technology actually change someone's ability to be financially included? How can this make it easier for someone to invest their money and receive interest or some sort of yield, or receive access to credit, or receive payments like humanitarian aid payments. Like we're looking a lot at those sorts of use cases and just identifying, where can this technology be game changing for whether it's the social sector, or like our for-profit entities that are just trying to create an impact in the world.
Yeah, I think in this moment, it is January 24th, Friday. I think it would be disingenuous for us to not mention super quickly what you just did, which is like the larger policies that you guys maybe don't impact. Therefore, there's no point in opining. You guys are not, you don't have suits sitting in DC lobbying for digital assets or for Web3 or blockchain. But I do think it's worth mentioning because we mentioned it off mic. So I want to give it its 30 seconds in the sun, which is that yesterday it was inked, the new administration that is inked something called the Strengthening American Leadership in Digital Financial Technology executive order. And I will put a link below on this episode if you want to go read it. I think it's quite fascinating. And for someone who's been around this since 2017, and since 2017, I've heard every single FUD narrative, fear, uncertainty, and doubt narrative. And one of them was always that the government was going to quash it and kill it. And actually, I'll put another episode that I think I recorded in 2022 saying the government is not going to kill Bitcoin. The United States actually, or crypto, and the United States actually needs these technologies to move forward. So I just kind of want to call that out because I think it's important because we're in this moment. This also frames the moment because if we don't talk again for 2 years, I'm sure another million things are going to happen. One of the things that you just talked about was the Crypto for Good Fund, and that you just launched the Crypto for Good 4 Fund at the end of 2024. And I want to bring up some stats. Let me look down here and pull up some stats. In the first episode that we did, I'm also going to leave that link below so people can go listen to it. A lot of alpha there. And I think that that's a pretty evergreen episode. I don't think you said things that were just like super timely and, you had to listen to it and then it was over. So definitely worth listening to. You said at that time, so this is March of 2023. We have to put March of 2023 hat on. Very bearish. I'm glad that you brought up FTX. That's PTSD for anyone in crypto. You were saying that the Crypto for Good Fund that was in 2022 had 200 proposals from 50 different countries, right? And you had 3 winners. And we can dive into some other stats that you brought up. Talk to me about, let's now look at the Crypto for Good 3 Fund, which has probably now concluded because you're in the Crypto for Good 4 Fund. Or if you could talk about the most recent numbers, right? You had for Crypto for Good 1 proposal, Crypto for Good 1, sorry, we're using a lot of acronyms here. Crypto for Good 1 in 2022, you had 200 proposals in 50 countries. Has that expanded? The story in my head is you now have a lot more proposals and maybe double the countries.
Yeah, so I wouldn't say a lot more, but definitely more. I think this round we've got over, yeah, low 200s, so it's increased. Um, Number of countries, I would say it's low 50s, so it's gone up a bit
Okay.
as well. Frankly, I mean, given our focus, Africa, Asia, LATAM, there's only so many countries that you're going to hit, and I think we're getting higher quality ones that we're seeing now. So I do think that we're reflecting on some of the applications that came in round one in 2022. Um, it was there. This was obviously like this is 3 years ago, right? So maturity is different in the space, and so you're seeing much more sophisticated use cases coming in. And I'm happy to speak about some of the pilots that we've been running over the past few years. Um, there's this one that we've been doing that we actually just wrapped up a few months ago. It was part of an earlier cohort, but we gave it a bit more of a runway so that we could collect more data and understand how this product was shaping people's lives. But this is in Cameroon, and so in Cameroon, the average person does not have access to a savings product, right? And this is something that we've talked about previously, just around like um, store of value, inflation hedges, right? So like if you are someone in an emerging market, you don't have access to, let's say, US dollar denominated notes or whatever it is, what do you do with your money to prevent it from being eroded away? Um, and so in Cameroon, the group that we were working with, these MSMEs, so micro and small medium entrepreneurs, they have been, when they earn money, they don't have options in terms of where they're going to park that money. There are no savings product available for this user base. So when we were surveying them, 9% of them had accessed the savings product before this pilot. And so like alternatively, like if you have some idle capital sitting there, like, what do? You put it under the mattress, but this is a country that's got at least like 6% annual inflation for the past 30 years. So then you're just losing value just by having that money sitting there. You can put it into like a rotating savings group, like a Rosca or a Tontine, which is like a fine option, but it's not liquid, right? Like you need to wait for your turn to get that money out. So you can't cash out whenever you want. And you're also not generating interest, right? This is like it's like a community savings product. Um, or you can actually pay someone to hold that money for you, just as like kind of like putting it in the bank. It's secure, but they're actually charging you money to hold. They're charging you to hold that money, so it's a negative savings rate on top of the inflation loss. So the partner that we worked with in Cameroon called Ijara, they acquired an asset manager license from the central bank, and then they were able to purchase government bonds. So these are government of Cameroon treasury bonds, yielding like 6-7% a year. And then typically, like the minimum ticket size to buy a bond it comes up to about $1,500 US. It's a million CFA. And so obviously that's not affordable for your average person in Cameroon. But with blockchain, they were able to tokenize it and then fractionalize it infinitely small. So that way, you and I can just go on a mobile app and purchase like $5 of the Cameroonian bond and then yield 7% on our savings. And it's all in your phone. It's secure. You know that like it's not going to disappear on you overnight. It's traceable through blockchain. So this is something that they did. The pilot reached, well, now it's over 25,000 people, over $500,000 has been deposited just as a savings product. Yeah, 46% of people that were using this product were first-time savers. So first time they've actually accessed the savings product. So yeah, just like a really, really fascinating use case where people talk about real world asset tokenization and things like that, right? Like that's been kind of a buzzy thing for the past, I guess maybe let's say 2 years. But there hasn't really been a clear use case for it, at least let's say in like the global north, where you have like ETFs, you have easily tradable equities and bonds. But in markets where you don't have that liquidity, in markets where you don't have the ability to easily get in and out of products, like tokenization is actually extremely, incredibly useful. And so that's what we've proven out here in Cameroon.
That's absolutely incredible. And I was going to pull up, but I don't want to be looking at my phone the whole time because I have so many things I want to reference because we haven't spoken it so long. But two of my buddies that I did the Peace Corps with, we have a chat, and the chat is full of memes. It's full of ridiculous stuff, but we're normally talking about the world and what's going on. One of them lives in New York. I'm down in Bogota, and the other one lives in Singapore. So we're really kind of spread out and just looking at the world through the internet and through this chat. And he sent me a tweet the other day from somebody who said, "Hey, I've been teaching blockchain at university since 2019 or something. There are no use cases beyond just Bitcoin or something." It wasn't. And once again, I'm really giving you a TLDR here, right? I'm really giving you the cliff notes. It wasn't even from a Bitcoin maxi or maximalist perspective. It was just like everything else is a scam. Everything else doesn't work. And so I was responding like, "No, I'm actually about to record an episode with Ken, and I will send that to you. Just give me a second to like get that on wax." So this has provided that answer. This is absolutely amazing as far as being able to allow people to protect their purchasing power, and how many people benefited from this.
Yeah, so in total, or as of like the latest numbers that I saw, which have been a few months ago, is about 25,000 people have tapped into this. Um, Another thing, and I think this is like, so this is one use case that we're very proud about and very happy to talk about. There's another one as well that's been quite popular for us lately, and it ties into something that we're also launching at the moment. But so as part of Mercy Corps, obviously we do a lot of humanitarian work. So we are the ventures team. We do the impact investment, but we're obviously tied to a much larger organization that has humanitarian efforts in 50 countries around the world. And there's an emerging space within humanitarian work. It's called anticipatory action, right? So this is the idea that if I give you money before a hurricane hits you, you can use that money to buy supplies, move up country, move your cattle, like whatever it is, right? And you can invest in your own resilience so that when that disaster comes, you are less negatively impacted by it. This is proven to have a 7-to-1 ROI compared to traditional aid, but it just hasn't really taken off yet for a variety of reasons. This is actually an area where we've been expanding a lot of our focus. So we have a humanitarian venture lab now, and that's focused specifically on identifying how new technology can improve the delivery of humanitarian aid. And so anticipatory action is one of those areas where we can see how technology can greatly benefit the deployment of this aid and get higher ROI. So like I'll walk you through what we did in Kenya. With the climate disasters nowadays, because of advancements in geospatial data, so like satellite imagery and then some on-ground data as well, and then also advancements in AI/ML like climate data analytics, we are actually, as a society, we're able to predict over half of climate disasters. So we know at least a week in advance when a storm is going to hit, right? Like we know when there's going to be flooding in this area. And this is something that wasn't available to us until all these breakthroughs in machine learning with like larger compute abilities. So that's one. But like once you identify a climate disaster, like let's say we know a storm is coming in a week in rural Kenya, getting money to rural Kenya is hard, right? Because you need like from HQ, let's say in the US or EU, you need to send it to a switching bank, which needs to send it to Nairobi, which needs to send it to a microfinance, which needs to send it, and then somehow needs to get cashed out, right? There's a lot of steps along the way. There's a lot of fees. You're talking maybe like 7 to 10 days. You're talking like easily 10% of that money is just being lost in the various like bank fees, switching fees, and whatnot. And so the advancement that crypto brings here, and this is actually like an area where we're super excited about just because of crypto, is that like I mean this better than most. Like crypto rails completely wipe away the need for all that, right? Like from HQ or wherever your pool of funds are, you can immediately send a humanitarian aid payment to the affected smallholder farmer's mobile wallet. And then they can cash it out locally well before that storm hits. And then they can say, like, move their family to a different community so that nobody's going to get hurt when the storm comes, or buy some more food because they know that market prices are going to go up and then they need to make sure that they have enough to feed their family. And so we did this, like I mentioned, in Kenya, and we're expanding this work now. It's in Nepal. There's a few other countries that we're going into, and we're launching what's called the Anticipatory Action Accelerator, and it's focused on identifying these use cases, building the evidence base for how we can scale up anticipatory action in more parts of the world, and then obviously, hopefully, crowding in more interest, more funding, so that this becomes the new frontier for aid work.
That's wonderful. And when you do that, is there any, because I think, and once again, I'm blurring some things in my head. I do know that Mercy Corps Ventures at a time was doing similar anticipatory work around crop and crop insurance. And I believe that tied in smart contracts where it's like if the dew point or whatever the barometric level hits this, then you're going to get. Is this a smart contract, or is this just like we have a list of 100 farmers or 100 people in the pueblo and we need to move them?
Yeah, I'm glad you mentioned this. It is very similar to the work that we did on parametric insurance, right? You have a certain parameter, a weather climate parameter, and you've set a threshold that says like, okay, if there is X amount of rainfall, or if the soil moisture level is below Y, or if your vegetation levels are below, whatever it is, then the payment is triggered. So you can do this programmatically. You don't require, someone sitting behind a desk and like looking at the data every day and saying, well, like it's actually like it's programmatic, it's code. So you can say like, all right, NDVI, which is a vegetation index metric, that's what we use for the Kenya pilot. But you can obviously use a million other metrics. Once that reaches a certain bound, then we know that a drought is upcoming or a flood is upcoming. And then in that case, then you can the smart contract will programmatically release the funds to people in the region where we know that this is going to happen, right? So again, it reduces manual targeting, it reduces the selection process, it reduces the disbursement process. It all becomes ingrained in code, and it allows you just to run a lot more efficiently. It allows people to get their money faster, which I think is probably the most important part here, right? Because we know that if you get the money faster, you're going to have better outcomes. And then on top of that, of course, like the operational efficiency gains and the knock-on effects that'll come from that.
When you were laying out that, you were like, well, what if we get it from HQ? And I'm thinking from Portland to Kenya, for example. And then you're like, well, what if we get it from Europe? And I believe the Mercy Corps headquarters is in Edinburgh. It's in Scotland. And I'm like, wow, this is just so painful doing the TradFi way when I could just be
Yeah,
like, hey, Ken, what's your wallet? Yeah, okay, great. All right. Is it there yet? Yeah, it's there. Great. Thank you.
exactly.
Um,
It's like you can do this so much easier. And like, Kenya is an interesting place because there's such mobile money proliferation to a point
mhm.
where you can actually say like, well, like crypto's value add in Kenya is probably lesser than what it would be in a lot of other markets. And I would actually agree with that. It's kind of like saying like maybe the person that this professor that you were mentioning, right? It's like if you only live in like a developed market where financial infrastructure is solid, and you can do bank to bank transfers and you have access to a variety of financial products, like I can understand why one would say like, okay, this is not useful technology. um, but like once you start to go into markets where the existing infrastructure is quite poor or non-existent, then it becomes a matter of, okay, this is actually life and death. This is a way to improve how people can access financial markets, how people can invest in their own resilience. It gives people much more opportunity to build a life.
Yeah, I think you hit the nail on the head. I constantly will get on Twitter and take kidney shots, for a lack of a better analogy, at people who are just like, this is useless. This doesn't matter. I'm like, dude, you haven't, okay. If you're just sitting in the United States, you don't see these problems because you're probably not also at least cognizant that the fact that the dollar is losing purchasing power, even though it is, and you'll complain about other things that show this, but you don't see it. And then I'm like, the other thing is, you're just not part of a financial system, or you haven't been around a financial system that is kind of, I'm trying to pick the right adjective here, but it's just not up to where the US is. And so you can't foresee these things. You can go on and download an app, put in your social security number, go through KYC and AML in under 2 minutes, and then buy stock. Most people can't do that.
Yeah.
Most people don't even have a bank account that then they could digitally fill their Cash App or their Robinhood account with to then buy something to protect their purchasing power. And actually, I wasn't sure if I wanted to build on this, but I do think it's important. Larry Fink, the CEO of BlackRock, has, I don't know, $11 trillion assets under management. It's the biggest financial institution probably in the world. He's at Davos and he's sitting up there on stage and he's just banging away at the Bitcoin this, protect your purchasing power. And he's also really pushing the tokenization of real world assets. Now, when I hear him say that, I think two things. One, I think the wealthy or people who own stocks are so excited to get the rest of the world to be able to buy tokenized Amazon, because then if they own Amazon, Amazon stock's going to go through the roof. Amazon, just as an example of a US stock. Someone in Colombia, for example, doesn't really have access to getting Amazon stock. So they can use Amazon and buy stuff, but if they want to take advantage of that growing ecosystem and what Bezos has done, they can't really do that. The second it's tokenized, then someone sitting in Colombia could open up their app and be like, yeah, I want to buy some Amazon stock. So the Amazon stock goes up. So part of me is like, okay, the rich are going to continue to get richer. But then I hear what you're saying, and I think about it as well. And I think about the person in Colombia, or you're saying the person in Cameroon, who's like, now they can buy something that potentially year over year will appreciate, whether it's Amazon stock, whether it's Apple stock, whether it's Netflix. If you think about those three things, or let's go with Apple and Netflix, most people around the world have had access, whether they can afford it is different, to an Apple product. And many people around the world have a Netflix subscription, but they've never been able to tap into those growing ecosystems and say, hey, I want to benefit too, just like everyone in the US. Part of me thinks like the middle class in the US only gets wealthier compared to the middle class in Cameroon or Colombia, for example, just because they have access through Robinhood or through their 401k, or they can just go buy fractions of a share of either, and let's just use those examples, Apple or Netflix. So part of me is like, and I wanted to ask you personally about how you feel about this, but part of me is like, yes, it's great if we tokenize all these things. Let's just use the Apple or Netflix. Part of me is like, that's great because it will give the person in Cameroon or Colombia, just those examples, low-hanging fruit for us, a chance to be able to protect their purchasing power by buying something that year over year honestly continues to, even if it's 4 or 5%, that's better than zero and or losing 6%, like you're saying, as the debasement of currency is happening in Cameroon. The other part of that is, as that happens, the people who already own those things are just going to continue to get wealthier. So I wasn't sure if I wanted to throw that across your desk. It's kind of a heavy thing, but how do you think about that? Because it feels like it's the same coin, but there's two sides to
Um, yeah, I don't think I have a very like sharp answer on this. I think that. inevitably with capitalism, you're just going to have a view where people who have capital continue to accrue capitalism, right? Or capital, they continue to accrue wealth. I think that's inevitable within the system that's created. I think the only way that you can truly address this, like, I don't think by reducing access to these products, you end up hurting people. Like the people who are hurt more proportionally are the people who are less wealthy, right? And so, like, yeah, that billionaire makes an extra $1 million. Like, great. That's marginally, that means nothing to them. But the person who's like much less wealthy, if they can get access to a responsibly designed um, financial product that actually gives them a bit more insurance or a bit of a buffer when there's a rainy day, that obviously makes a much bigger difference to their livelihoods than it does to that billionaire. And so I think in general it's a good thing. It's a good thing that we're moving forward with this sort of stuff. And I think just like it's kind of just the duality of the system where like inevitably the people who make the larger absolute gains are always going to be the people who have more money. And I think the only way that you really address that is through like very progressive taxing of rich people and like wealth taxes and things like that. But that's probably not here nor there.
I love that. I love that take. I love that take. We're not going to dive into that anymore. Um, I wanted to go back to when you first came on the first episode. One of the things you said when you were looking at, I said, hey, looking at Mercy Core Ventures portfolio, and we haven't even really defined what Mercy Core Ventures is. I think if you're listening to this, you probably have an idea of what it is. Go back and listen to the first episode. You give a great definition of that, of kind of the breakdown of what Mercy Core Ventures is. But in that, I said, hey, looking at your portfolio, Mercy Core Ventures, what's the breakdown in percent of companies that you guys are working with that are Web3 native or using blockchain or crypto, whatever words you want to use? And you said you had about 40, and 6 of them where Web3 native was the wording you used. So it's about 15%. Has that percentage grown, or has it stayed the same, or has it even dropped off since we last spoke?
Yeah, I think we're about 20% now. I think it's
Okay.
about 10 out of 50 is like a rough parameter. So I guess a slight bit of growth. I think like if you've been following like the venture capital world in the past few years, like it's been very dry. Like people have not been investing that much. A lot of like people have been risk off just as a result of like the way that financial markets have been, and so you see venture capital has been much less willing to invest in general. We've still been active. We've been active across a lot of different areas, focused on like agriculture solutions, like ag tech, climate tech, fintech. Like we're still looking at these spaces. I think within the Web3 world, I think the Web3 world, what's challenging about it is that you have, I, I think it's still, like, yes, it was a bull market, it was a bear market, but there are still also very many times where it's just like extremely frothy, right? Like you have extremely pumped up valuations. So you've got like companies with no revenue, no users, and like very little of anything going on that somehow have like 20 $30 million valuations. It's probably a byproduct of the fact that there just was too much money sunk into VC like Web3 VC funds, and they needed to deploy capital, so they're just bidding against each other and bidding up valuations on these firms. But I think as a result, for us, like a relatively small shop and also just focus on emerging markets and so like specifically socially impactful use cases. Like there just weren't that many good deals that are coming along, and so we just obviously like we're still investing, but it's just about choosing our spots, making sure that our money can actually go to the right entrepreneurs, people that we feel are values aligned, focused on building like a more financially inclusive world.
As the Bitcoin price continues to hopefully go up, and historically 2025 should be a bull run if we look back for crypto. If the trend stays, do you think that money will come back as the tension comes back? Those seem to always follow hand in hand.
Yeah, it's always uh, dangerous to make any predictions around this sort of stuff. But I think it's what's clear is that there is obviously a lot of forward momentum in the crypto sector. Like this is a really great opportunity. It's really good timing for people. Um, I think I think what I would like to see, and I think this is where I probably I'm not sure if it's going to happen, but I think like ideally the crypto sector would be investing a lot more cross-chain, and then also a lot more in emerging markets. I think what you're seeing right now is that most of that money is still controlled by a few protocols, and these protocols are, um, well, I mean, understandably, from a business perspective, they want to be investing in their own ecosystems, right? They want to be investing in their own, um, in builders in their own chains. And so it's completely understandable. But I think that's one area where it's like it becomes, it's to the detriment of the larger crypto sector. That's one. And then I think two is that uh, an emerging markets focus, where, as we were speaking about earlier, where you can really see true value being generated with crypto. Like ideally, these people with the capital are going to start shifting more towards emerging markets, where immediately you're not going to see the TVL that you're hoping for. You're not going to see the money flowing in that you're hoping for, or like the number of transactions yet. Like you're not going to get that today because frankly it's just not there. So if you only have a short-term mindset, it obviously is not an attractive opportunity. But if you go for a longer term thinking, or you have more of like a, yeah, let's say you just think more longer term, like where are the next billion users going to be? Like where are there real pain points when it comes to access to credit, access to savings, access to jobs, DePin, all this sort of stuff, right? Like where is that real opportunity set? It's not in where all this money is sitting. It's going to be in emerging markets. So I think if you have maybe more forward thinking, longer term thinking around this, I would like to see a lot more of the crypto sector funding flowing towards the emerging markets, where you'll actually see this like meaningfully change people's lives, and then I think on a longer time horizon, you'll actually generate much more value on chain as a result of it. Right now, I think what's happening is like everyone's fighting for like the same few thousand users in the global north, right? It's like meme coin traders, financial profiteers, like all the money is pouring into like the exact same use case and the exact same population. It's a repeat of what's happened like every single cycle in crypto. And so, just hoping that there's less of that and more so like, all right, let's think bigger picture, let's think longer term around what this technology can actually do.
Can you go ahead and just define the acronym DePIN? I believe it's decentralized physical infrastructure, but some of my DeFi chops have been lost because I'm just buried in the world of Bitcoin. Is that right?
Yeah, that's correct. It's decentralized physical infrastructure, which I would say that I think DePin is, I mean, the term's been around for, let's say, a year or two, but I
Mhm.
think it's still like somewhat opaquely defined. You could make an argument that anything that has a real world, like concrete feeling is DePin. But I think some of the big most popular examples are things like helium, right? Like you have like IoT sensors or IoT networks, and you have the ability to share data, or you can share other virtual goods. Like so, for example, like Filecoin is one of the probably the OG in the world of DePin, where you can share cloud storage. I think the way that I see this playing out in emerging markets is it's more like traditional infrastructure, right? So less like digital, or less like virtual infrastructure, and more like physical, like actual, like tangible infrastructure. So we ran a pilot in India. This was from Crypto for Good Fund. It was from the first Crypto for Good Fund. It was Atlantis DAO. They're based out of India. They stood up a decentralized water network, so helping people get access to clean water in rural India. So people would bring that water, like they would harvest rainwater. They could filter it, make sure it's clean, and put it into a network, and then people could buy it using the network tokens. And then obviously it's reputation based, so whoever's putting that money in will get like, if you're putting in good quality water, then obviously people are going to want that. Then other people can also work on the network as validators. You can validate the quality of that water, so you can go and do a pH test a few other metrics and see. So those are other income earning opportunities. So I think with like DePIN, so these physical infrastructure networks, so whether it's water, clean energy, buildings, roads, however you want to define it, or whatever you want to include in that, there's opportunities to both improve people's lives, like fill a gap that's existing in these markets where you don't have good infrastructure, and then also create job earning, like income earning opportunities. So you're solving quite a few pain points in these markets. So this is an area where frankly I feel like there's a lot of potential, and I think it just requires like some some bold thinking and some smart entrepreneurs to go for it.
Yeah, DePin is fascinating. Every project I've seen that says it's DePin is always interesting. As you said, Filecoin being the OG, that's definitely being super transparent. A crypto I've had for quite some time in my portfolio because I just think the idea of cryptographic decentralized cloud storage is pretty impressive, especially basically like a more secure Google Drive, or, and I'm really dumbing it down, but a more secure Google Drive is great. On the first time you came on, we were talking about, I believe we were talking about crypto for good, and I think this was around crypto for good, but there were four focuses, and I want to read them out and then ask you a couple questions. But I do actually want to come back to the decentralized water project in India after this, though. On the first time you came on, we were saying you said there were four focuses. I believe this is crypto for good, and I may be conflating crypto for good and just Mercy Core Ventures mandate in general, but I believe it's crypto for good. It's access to credit for underbanked users, nature-based solutions for climate resilience, humanitarian aid delivery, and transparent supply chains. Is that crypto for good?
So you've got a better memory than me, but yes, that was some of the focus areas that we're looking at. I believe in the first or second call, and then in the more recently, we've also included DePin, and we've also been
Okay.
including asset tokenization as well. Oh, sorry,
Okay.
another one that I would say is we've also been talking a lot about ramps. I think obviously the ramp on off ramp pain point is
Massive.
yeah, it's massive, and it's in every single anyone who works in crypto has this pain point, right? So it's like there needs to be much more like consideration around like how can that be resolved?
Yeah, it's very painful. That's one of the hardest things.
Yeah.
So, okay, when I on the first episode I asked you, I said, okay, can you have these four horses, right? Which one is going to continue to grow? And you said this is a cop out, but and then you basically said they each have their reason for maybe growth, but focusing on those four and knowing now that obviously you've added in DePin off and on ramps. On those four, though, access to credit for underbanked users, nature-based solutions for climate resilience, humanitarian aid delivery, and transparent supply chains. Which one of those, since the last time we spoke, has actually grown the most in, in I guess I want to say inertia as far as the projects that you've been working? If you could hone in on one.
Um, I think aid delivery.
Okay.
I think humanitarian aid delivery is actually the one where we're seeing a lot of growth and opportunity. I think this is a mixture um, of the humanitarian sector like waking up to the potential of this. I know you had Hugh on the show, and Hugh's very far ahead in terms of what like crypto can do, and I think more Hughes is going to be how the humanitarian sector gets to that point where we can actually use this like more in regular programming. But I think that sort of awakening is happening within the sector. And so beyond just seeing crypto as like, oh, it's a fundraising source, it's actually being viewed as like there's programmatic value in learning how to use crypto and how that can be. So I think that's one piece. And I think there's also a piece where, like in a lot of emerging markets, the demand for crypto has grown tremendously, right? Like this is just like, typical like adoption curve. But you're at a point now where, like for example, with remittances, right? Like you have Hawala networks in the Middle East, which is a way to send money. Like if you need to send money to Afghanistan, like you can go to the corner store and you probably have a guy who knows a guy who knows a guy who knows a guy who knows your cousin in Afghanistan, right? Like it takes like it's the network is incredibly vast and incredibly intricate and super sophisticated while still being mostly managed as like a paper-based solution. That said, they are huge adopters of cryptocurrency, like of stablecoins specifically, because they know that this can make their business much more efficient. And so over the past few years, we're seeing a lot more adoption, or like let's say an increase in interest among that user base as well. Similarly, in like Southeast Asia, you have hundis, pretty like a very similar concept, but again, like different ways of getting money into countries, and these people are now more pro crypto than ever before. And so blending that together and sorry, and maybe the third element here that I would say is that also from a technology side, I know I was saying earlier that like it still hasn't, you haven't seen that much technology investment going into these sort of markets, but it's obviously more than it was before, and probably just not not fast enough for my liking. But you also have more tech players who are awakening to this opportunity to say like, okay, we can help serve people in these markets. Like the infrastructure is, we can build the infrastructure, make sure that money is getting into these places and it's helping to reach people where it needs to be reached. So combining a bunch of these factors, and I'm sure I'm missing some other ones, but as a result, what we're seeing now within Mercy Corps is a lot more demand and interest in how crypto can be deployed in programs. I mentioned earlier, we've launched this humanitarian lab. This humanitarian lab is working closely with our Mercy Corps country teams. We sent out an expression of interest, so just a general call for proposals for internally within Mercy Corps to see, are there any country teams that want technical advisory and some funding to run a crypto program. We got 14 responses. This was last year.
And that's from different countries within Mercy Corps.
Yeah, exactly.
Wow.
14 out of the, let's say 45 country offices that we have, so almost a third. It's pretty good numbers. And this is over a year ago. And so I think you're seeing more and more interest and more awareness of what this is. To that end, we've actually been running pilots with Mercy Corps country teams. So we ran one in Southeast Asia, and we're doing another one now in Nepal. And we're going to do, we've got a few more in the pipeline for Afghanistan. We've got something in Syria. There's a few across Africa that we're looking at Haiti as well. So the pipeline is quite robust. And I think we're just getting more and more interest from different country teams to do this sort of stuff. So, locally within Mercy Corps, I'm definitely seeing much more growth and demand for the role of crypto. And yeah, like I mentioned earlier, the Anticipatory Action Accelerator, right? And like now we're going beyond just saying, cryptocurrency, but also layering smart contracts. But I think, again, there's an awakening that's saying like, this technology can actually be quite impactful for how we operate programs. When we think about funding cuts that are happening to the humanitarian sector, there's going to be more and more pressure to figure out how you can run these programs on a shoestring budget. And then, unfortunately, on the other side of that is that you have more and more people who are requiring humanitarian aid. It was 300 million people last year. It's probably going to go up, right? There's more conflict in the world. There are more climate disasters in the world. So as a result, more and more people are going to need humanitarian aid. And so these sorts of solutions, or like leaning into new tech, allows you to reach these populations better, do it more efficiently, and just create better programs altogether.
I love that you said we need more Hughes in humanitarian. I think Hugh will enjoy that. And it's interesting to hear that 14 out of the, like you said, 45 countries at Mercy Corps are very interested when Mercy Corps Ventures is like, hey, who wants to look at a crypto pilot? And 14 show interest. I think that that's just amazing. And it shows that honestly, I think the best marketing for crypto in general is when Bitcoin goes up and other people just all around the world just start to say, hey, you know what? This isn't the boogeyman. This isn't the worst thing in the world. And when I was at Mercy Corps, I was at Mercy Corps only 2 years ago. When we actually first recorded, I was working at Mercy Corps. Bitcoin was actually, now that I think about it, because that was in January of that year was 21,000. So it's grown 5x. And I think the appreciation to the fact that this isn't going anywhere has also grown 5x. And I'm using Bitcoin just as like the umbrella because as that grows, I think credence to the rest of the ecosystem will grow. 14 out of 45, absolutely amazing. Stablecoins is not something that I think is going away. I think stablecoins are going to continue to grow. Stablecoins is something I'm seeing actually locally here. There is a group of people here that have launched a Colombian peso stablecoin, and they're doing it on Celo, which is interesting. And that is honestly just to make it easier for rural farmers to be able to exchange value so they don't have to go figure out how to go to a bank. And then this gets into exactly what I want to get into here, which is the on and off ramps, which you brought up. And I want to go a little bit back to the India project, the water project, and kind of give some other context. When we were first talking about you hopping on, you had said, hey, can you send across some questions? And I sent you over this massive list of questions. Some of them were mine, but the majority actually came from my buddy Eric, who is in Costa Rica, and he's working to launch a water-focused wash program, a wash project, I should say, in Guatemala that's going to be around the sale of NFTs and how when each sale happens, people get funding for then wash projects in their rural communities. And you may actually be fairly knowledgeable of Guatemala, but I believe it's out in the Huehuetenango region, which is actually where I lived for a couple of years when I did Peace Corps. So the Huehuetenango region is very, very far away from Guatemala City. If most people who go to Guatemala, if they're going as a tourist, they would never get out there because it's like, it's like when Latinos go to the United States, they go to Miami and New York, they're never going to go to Seattle. Huehuetenango is the Seattle of Guatemala. But they're working to get this project going. And one of the questions he had, and it goes back to the on and off ramps, was, what are the key challenges you come across in your program specific to converting crypto to fiat, which is basically on and off ramps? Can you talk about some of the challenges that Mercy Corps Ventures has, had in the past, some of the challenges you've gotten over, maybe some things that you see, some solutions you see now, and maybe some solutions you're excited about in the future that don't exactly exist now because maybe we just need more, we need more Kens, we need more Hughes, we need more Scotts, we need more Tims to hop in.
So yeah, crypto to fiat, or like fiat to crypto, crypto to fiat, either way you're going, the ramp is arguably the biggest problem in crypto, and it hasn't been solved yet, right? Like, I mean, if you try to buy, uh, 100 USDC using your credit card, you're going to get rejected on a lot of platforms, right? Like, if you're using a US issued credit card, it's just not going to allow you to do it. And then, what are your options? And like, send a wire transfer. That's expensive. That's slow. Like, it's so even in like the US, you're having issues with that sort of stuff. And then obviously in markets that are less liquid, like it becomes very tricky to get on there. So I think like this remains the thorniest challenge within crypto. Um, where we've been working, like I mentioned earlier, like we have like every country has different solutions and different options. So what you need are like locally led off ramps, right? Because they need to be sensitive to local currency regulations. They need to be sensitive to like what banks allow you and don't allow you to do. And obviously every country has a different framework around how they will or will not regulate crypto. And so it needs to be a locally led off ramp is, my mile high, my perspective on that. So as I was saying around like the Hawala networks, like in Syria, for example, we're hearing that like a third of their transactions are happening in stable coins now, right? Like this is a network that used to be purely cash, and now it's actually gotten to a point where it's, a third is in crypto. And so like if you can tap into that network, then you have found your crypto to fiat off ramp, right? Like this is a network that moves millions, if not billions of dollars on a yearly basis. And so obviously like 30% of that is pretty significant. So if you're trying to run some programming, pass a few $100,000 through that network, like it's like there's sufficient liquidity there to take on that volume. Um, for example, Afghanistan, we're working with a partner that does a lot of importing, exporting, and so they're quite eager to take on foreign reserves, whether that's in USD denominated stablecoins or otherwise. And so that's an opportunity where they can help you manage your stablecoin floats, help you get in and out of crypto positions, and then partnering with them allows you to run humanitarian programs. Um, you have in Kenya, you have local startups that are serving this need. They're providing that on and off ramp to whether it's cash or mobile money. Like, there's various options that you have. And in fact, actually, I'd say this is quite common across many African countries now. One of our partners, Phone Bank, is doing this, helping people um, go from mobile money or airtime, prepaid airtime specifically, to crypto and back. And so it's just different ways for people to get in and out. And I think you're seeing a lot of creativity and you're seeing a lot of innovation around how this works. And of course, it's curated to that local market and like the local user dynamics around that. So for example, like prepaid airtime, not really a thing in North America anymore, right? But obviously, like there's still like I think it's like 8 billion prepaid SIM cards out there in the world. And so it's just like, okay, like how do you leverage that infrastructure, that network, and to make people better access it. I think the other part around this is like we're still doing like the sector is still doing a really poor job of improving UX, right? Like actually getting UX to a point where the average person who's like not that crypto native can feel comfortable sending money on these platforms. Like for me, when I'm trying to bridge between chains or move between different wallets, like I still get annoyed and I still get like apprehensive about it. And so, and this is, I work in crypto. And so like if I feel this way, like I can't imagine how like, if you want to do call it like the grandmother test or whatever it is, right? Like, just take your average, like it's like someone who's less confident in their knowledge of the industry, like how can they do this well? So, there's an area here where it's like that abstraction or abstracting away the whole like crypto piece of it. Like that obviously still needs to be improved as well.
Yeah, the UX is not friendly. What do I have? I currently have Ethereum that somebody sent it to me on Arbitrum just because it was cheaper and I didn't have to do with gas fees. But now, if I want to donate it to Mercy Corps, I have to put it back to the Ethereum network. And that is just so freaking painful, pardon my Spanish. And even though I've been in this, I'm just like, oh, what a slog. So if it pains me, and I'm sure that even that sounds pain to you and other people, it's like, how is someone new to this going to ever navigate? They're not, is the answer, which is why I think it's still a little bit slow in some of the adoption. One of the things that Eric, I have a couple more questions around Eric's project, if you can humor me, just because I think it's great. One of the questions around Eric's project, or not one of the questions, one of the things they want to implement is smart contracts. And I know you and I have just talked about smart contracts. Mercy Corps Ventures uses smart contracts, especially in the anticipatory projects you guys are working at. I told you before we started recording that the advice I gave Eric was like, look, make sure you have multiple people review the smart contract because you don't want any snafus in there, any bugs, because that will tank things quickly. Beyond making sure the smart contract is okay, are there other things around a smart contract that he should be thinking of that, beyond the tech or within the tech?
Um, Well, I think specifically to smart contracts, your point is very valid. And I think something that we have seen and that we've actually like had, like, so for example, the pilot in Cameroon that we did is that there was actually a smart contract audit, right? They brought in a third
Yes.
party, kind of like a SOC 2 type thing, or like, whatever you want to call it, one of like a ISO certification type program, to review the code to make sure that it was actually, um, clean, not buggy, no loopholes, no backdoors, and things like that. That sort of stuff obviously gives it like some level of confidence to the user, even if the user might not be looking for it. I think your investors or um, your partners, I think it's a sign of confidence that you've got something like that to indicate that like you're taking this seriously and it's been externally validated. I think that's one thing. Um, I think on the tech piece, I would just hammer the point on like, how do you abstract away the crypto? Like, how do you make this more user friendly? I think one area where, um, I know this is a little bit off topic, but I think like you're seeing more innovation is this whole like the new DeFi, but FAI. So like how like AI agents are helping people like access or like better manage their finances. Um, like obviously in places where people are less financially literate as well. Not to say like there's obviously a dangerous path here where it's like people are just going to get taken advantage of by whoever's writing like cheating code. But I think there's an opportunity where like everyone gets a personal financial advisor, right? Like you input your financial savings targets, your goals, and then it can help you create a portfolio or like make sure that you have a regular savings plan in place so that in 5, 10 years you can afford that thing that you've been trying to save up for. I think that's a clear opportunity that's coming up here.
Yeah, I saw that only recently on X, maybe like a month ago, the DEFAI, and I was interested. And the previous episode of this was with Andy Bryant. He comes on now monthly, and we talk about AI. It's just fascinating. Every time he comes on, my mind is just like, it's hard for me to, probably hard for me to wrap my head around. And one of the things he talks about is everyone's going to have like 3 or 4 agents in their pocket. And as long as you have a smartphone, you basically should have access to these agents. So I could totally foresee a world where anyone can have access to that. So the DeFAI, I don't know how to pronounce that. One of the other questions, and this is probably one of the last ones I'm going to ask you from Eric, and I think it's really salient for other people listening, especially if they're in the nonprofit sector. He says, how do you explain what Web3 or crypto is for the nonprofit sector, and what would motivate this sector to get into Web3? I think that this question comes from the fact that Eric is going to be needing both on the ground partnerships, on the ground local buy-in, which it sounds like he already has for the project, for the Wash project. He's getting off the ground using smart contracts, using NFTs, using blockchain in Huehuetenango. But I think also he's going to need some other local partners when it comes to other organizations. And I'm sure that, as he comes in and he already has a nonprofit that I believe has a shop in Huehuetenango, but I'm sure that, like any project I've ever seen that is done well on the ground, you have not only local buy-in, but you have multiple local partners and nonprofits and institutions, whether it's the local mayor's office or another nonprofit that's helping. Anything I've ever done has multiple stakeholders. So are there ways that Mercy Corps Ventures, when you guys are going into a new area, a new arena, and you're bringing stable coins, for example, and you're bringing crypto, is there a way that you guys kind of create and talk about the narrative to make it palatable? Or is this, obviously I assume it's contextual for every place you go into, but is there an overarching, as you said, a mile high thing that you try to get people to try to see, understand, or maybe find common ground on?
Yeah, there's a few points here. Like one of the examples is our partner in India, Atlantis DAO. Like they spent so much time building a grassroots movement around this. They ran so many local education sessions, getting people to understand like how does a network work for water sharing, how does a token work, just really trying to get buy-in from NGOs, from the grassroots communities, making sure that it's clear to people. So I think that's obviously a very important piece, right? Like spending time with people, hearing their concerns, understanding where they're coming from, and like maybe like clarifying some misconceptions that might be latent there. um, I think one area that I would touch on here is like one challenge or one mistake that I think people in crypto keep on making is we keep on talking about crypto, the technology, and we're not talking about the pain points that we're solving here. Like if you tell people why this is solving their problem, like if you understand their problem and you're telling them why this can solve their problem, then they will listen. But if you just tell them like, oh, it's permissionless, it's a network of blocks, and it's there's a consensus mechanism. Like, I mean, nobody cares about this, right? Like, nobody cares about this stuff. And I feel like, um, I think the framing here is more around like, okay, what's the problem that we're trying to solve? Less so around like, okay, like how do we explain Web3 or crypto to X user? It's more so okay, why do they need to even know what this is? Like, why does it matter to them what crypto is? And then start from there, and then obviously tailor that message accordingly. Um, and I think in terms of like maybe some of the areas where we like, zooming in on that, it's like, what are some of the pain points that crypto can help solve? Is like one is like we were mentioning earlier, like fundraising, right? Like it has represented a new source of revenue for NGOs, a way to decentralize crowdfund to bring in new capital to the space. So I think that's one area where you can make a case for it. Fund transfers. So as we were talking about earlier, right, like moving money from HQ to program teams or just moving money to beneficiaries. It's just faster. It's transparent. There's a record of it. I mean, all this stuff is like it just makes your operations more efficient and cleaner. Um, so I think like focusing on those sorts of elements is where it becomes a bit more straightforward what the value proposition is. And so I'd advise that like that's generally like how we try to go about this is like lead with the problem, like and then the technology will follow.
Perfect answer. Wonderful answer. I tell people all the time, I have no idea how my iPhone works, but it solves problems for me. So
Yeah,
there you go.
exactly, right.
Um, we're coming up on an hour, and I need to respect your time because you need to get back to doing all the great work that you are doing. So, on the first episode, you said, "Hey, if people want to get in touch with me, they can reach out on LinkedIn. Is that still the best place to find you?"
Yeah, that's good.
Okay, great. So what I'll do is I will put your LinkedIn in the episode description. So everyone, if you want to reach out to Ken, go ahead and do that. I'm also going to leave the Mercy Corps Ventures website so you can go check that out. And when is finally the Crypto for Good Fund 4 that's open now? Are the applications still open? No. Okay.
No, so the application window closed a few weeks ago,
Okay.
but the Anticipatory Action Accelerator program that's open for another month. And so if anyone's working on climate disaster risk financing, climate financing, feel free to check it out.
Okay, I will put that link below because I remember last time when we launched the episode, there was tons of people, I'd say 5 to 6, 7 people, which for me is a ton of people asking about this specific thing of how do I apply to the Crypto for Good fund. Because, at that point I was working for Mercy Corps. So they just assumed I knew all these answers. And I was like, oh, I need to have better answers and better links basically in the episode. So if you're watching this on YouTube, please subscribe. If you're listening to this on a podcast platform, please subscribe. Follow us on social media at Future Signal Pod. Ken, thank you once again for taking the time. And let's definitely not wait 2 years to talk again. How about that?
Yeah, sounds good. Thanks, Jarrett. Thanks for having me again.